Okay, this is Brian Stoll for Timing Strategies, Monday, November the 19th. And again, we got another Chinese water torture day today. Looking at the spiders proxy for the S&P. We got what we were looking for in our earlier videos. If you check out our October 30th, 31st, and so forth. The test of the lows that we were talking about up here, coming in down to potentially here, or as deep as 141.5. Well, we're seeing them now. It's not happening like I'd like to see it happen as far as price action. What we want to see, what I like to see for real momentum, is a move from our trend line down to this level and then back up rapidly. I mean, where it doesn't give too many people a chance to get in. And, well, problem is it's just kind of drip, drip, drip happening over a very slow period of time. Not good. Those markets tend to provide provide those violent whipsaw snaps back, but again, that's just estimating going forward, and that's just guessing, which is about akin to tossing a coin, which we don't do here. Presently, we are 60% long, and we're looking for potentially one or two more days of a stab low, potentially yesterday or today's low getting taken out tomorrow. Could we see one more day of that happen? Kind of another Chinese water torture day down to that 141.5 level. If that happens, we'll have 1, 2, 3, 4, 5 days lower. At that point, one more day lower, we are looking to add to our position. We are long again, 60% from this point right here. We got flat when the market came back up. We then got long again, or excuse me, when the market came back down on that day on Monday last week. So we are 60% long presently, looking to add to that to ratchet up to about 90 to 100% long. We do use the RIDEX 2 beta funds with the more aggressive accounts, but again, I have every indication that on any kind of technical basis, if the market is still running on technicals and not just massive selling by foreign governments of our paper, what that was, if the market is not, again, still running on, if it still has any technical structure left to it, we should see a snapback rally coming in here by today. Either that was today, Tuesday, or Wednesday. Keeping very close. Obviously, that's just, again, putting a finger in the wind. But this is an extremely oversold market. Put-call ratio is high. A lot of other indicators are extremely overstretched. We should see this snapback rally occur, and at that point, in the next day or two, again, tomorrow, Tuesday, or Wednesday, we will add to our positions anywhere between 90 to 100%. What I want to look at real quick also is the banking sector, which is really leading the market lower. Again, it's deeply, deeply oversold. We got a little bit of a bounce. That bounce did not today, if you look at the lows, it took out the lows barely of our pivot low on November the 8th with a low of about 90. Today we took it out 89.96 by just barely a couple of ticks. That's a market that does not want to go much lower, but it doesn't want to go higher just yet because it doesn't have enough stock, enough accumulation, enough people flushed out, enough of the downside is not wrung out yet, but nobody wants to sell here. Shorts are covering. Longs that are convicted longs, folks, that big commercials, are picking up as much as they can stock-wise, in my opinion, by taking out as many lows and as many stops as they possibly can of those who want to try to pick the bottom with a lot of leverage and can't sweat the noise in the middle. So from that point, let's take a quick look at the QQQs. Very strong move today, regardless of what the overall market did. I mean, it held up. We've got an inside day within almost another inside day, very close. This thing should bust. I'd like to see if we get a bust. Really would put a lot of confidence in buying very aggressively as a takeout of those last 3 days low, put us down on the Qs down to about 48, 45, 48.50. And from that point, if it takes off to the races, we want to be aggressively long at that point. One last note again, you can't be right in the long term until you're right in the short term. Longer term, this market is starting to turn exceptionally negative and bearish, in my opinion. If we do get a move back up to that regression point, which is getting further and further away, which makes it very difficult, what we would have here, in my opinion, would be the look for to go almost 100% flat, and those that are aggressive go short again. But what we're looking for here, take that out, what I'm seeing right now is an expansion, potential expansion range. A low, a takedown from the low, or excuse me, from the highs of November 6th, a move back up to get a 1-day reversal, 2-day reversal back up onto the 14th, then a take back down of that low that we saw on the 4th, and then I'll rip back up. So what we want to do is keep an eye on that low of Monday, November the 12th. That low right there is really the kicker point. A close back above that level after a takeout of that low of yesterday. If we can take out a low, of today, if we can take out today's low, the first day that we can get a close back up above that 143.65 level on the spiders, we want to get long regardless of whether we hit that 141.5 level or not. Other than that, please send us an email or give us a phone call. This is Brian Stoll for Timing Strategies, Monday, November the 19th, and have a good night.